If you're an OnlyFans creator, then you need to watch this video. While OnlyFans looks like an easy way to make a quick extra buck, there's a ton of tax implications that come from it. The IRS has even recently started contacting OnlyFans content creators in regards to a possible criminal investigation. My name is Ryan Steigenga, and I'm a tax attorney here at Gordon Law, and I'm going to go through most of the tax implications of dealing with OnlyFans. But before we get into all of that, be sure to like this video, leave a comment down below, and subscribe to the channel. Now, let's dive into the world of OnlyFans taxes. So when it comes to OnlyFans is very strict about tax compliance. Part of the terms of use that every creator has to agree to is that they will maintain full tax compliance. If a creator ends up having a tax issue, it's their responsibility to notify OnlyFans within 7 days. When they notify OnlyFans, the creators not only have to tell OnlyFans of the problem, but they also have to tell about what steps they're taking to remedy it and how they're going to prevent this issue from happening again. Given this, it's always good for creators to consider consulting a tax professional when dealing with tax issues. At the end of a tax year, a creator can expect to receive maybe one of a couple different 1099 forms. One of the main forms that they can expect to receive if the creator earns more than $600 in the year is a 1099 NEC, or non-employee compensation. If the creator just receives income from OnlyFans, this might be the only tax form they get. If a creator accepts payment through other channels, such as PayPal, Venmo, or Cash App, they might receive a 1099K at the end of the year as well. Now it's the end of the year and the creator just received one of these 1099 forms and may be wondering, what should they do with them? Well, a lot's going to depend upon what type of income this is. The IRS typically splits up income into either hobby income or business income, so the big difference between these two is whether or not expenses can be deducted. If the income is classified as a hobby, the IRS rules say that deductions and expenses aren't allowed. Hobby income is required to be reported as other income on a Form 1040. Now, if the income can be considered a business, the creator could be able to deduct different expenses that they've incurred in the production of income. Some examples of expenses might be for cameras, lighting, possibly clothing, if it's for specific work. Now, the IRS tends to make a difference is that if the clothing could be worn out in public or in your normal personal life, then it might not be able to be deducted. But if it's for the specific job, then it might be able to be claimed as an expense. The big thing here is whether they're ordinary and necessary for the production of income. That test will be different for every creator in every situation, so having a good tax professional is key. The IRS does have some guidelines which help determine whether the income is hobby income or business income. Some of those guidelines are you actively looking for ways to make the venture profitable? Do you track your income and expenses? Do you need to earn the money through the venture in order to survive? Are you continually trying to improve your account's performance? What prior money-making ventures did you have, specifically maybe with social media or other avenues for creators? And how many years has the venture been profitable? Usually here the IRS will take a look at the last 3 out of 5 years to determine if there was a profit or not. Now, this might be different if it's the first couple years, but turning a profit is a big thing. As I mentioned earlier, if your income's from hobby income, then it just gets reported as other income on your 1040. If the income is considered business income, then it gets reported on a Schedule C. The creator would need to list out their gross income and then any expenses and deductions related to that. This will arrive the creator at their net income, which is what they'll have to pay taxes on. That net income is also what they'll be required to pay self-employment taxes on. Self-employment taxes are typically the Social Security and Medicare that everybody's required to pay. By being classified as a business and being self-employed, the creator would also be responsible for what are called estimated tax payments. Estimated tax payments are prepayments on the taxes due throughout the current year. Failure to make estimated tax payments can result in a penalty from the IRS. So as you can see, there's a whole lot more than just opening up an account with OnlyFans and earning income. Thanks for watching, and as always, be sure to like this video, subscribe to the channel, Maybe comment down below of other topics you'd like to hear.